We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Welcome to Black Screen TV. Now Black Screen TV is going to be a flash video, probably once a week, where anything goes. Wyckoff, economics, what I come across the web, some interesting stuff. Well, here we're going to look at a couple of things I've posted to readtheticker.com Pinterest. Now this is a favourite chart of Fred Hickey, well-known tech newsletter writer. He says here, or the chart that he noticed here is, let's pop it up, drag it across a bit. He says here that the semiconductor sales year over year matches MSCI World Index trading 12 months EPS. Pretty much saying it's one of the highest correlating forecasters of world stock indexes, and it's going south. So that's great, isn't it? So we'll have to keep an eye on that. If you want to find these, just Google Read the Ticker Pinterest. Okay, let's go back. And what do we do? Back to the board. And this chart here is the yield curve leads volatility by 3 years. Okay, so there's a high correlation between the yield curve of the 3 months of the 10-year, and it leads volatility with the VIX. So the yield curve inverted is rising. It's at pretty much the same level it was in 2008, and I think that's what's that year? And 2003. So which is pretty much a 2003 and 2008 bottom. And the VIX index is soon to follow. Now the VIX index isn't the stock index, so the VIX index can skyrocket to 30 and 40 and stocks go down 20%, or VIX can skyrocket to 30 or 40 and stocks can go down 60-70%. So the VIX is not exactly stocks, but we'll have to wait and see. But we're in for a ride. Now if you just remember that point about volatility increasing over the next, looks like 2019 to 2021 or 22, so let's say 3 years, let's go with that. Take into account a video I watched recently on Real Vision. It's Real Vision TV shows. This is the ones they release after a period of time, and this gentleman here, Michael Howe, talks about his video, and what he concludes that is because the Fed's basically going to be printing and zero interest rates are going to be here for a while, stocks are going to go up, but with flash crashes or quick sudden plunges, 15, 20, 25%, just like we had in Christmas. The stock is going to trend up with almighty scares along the way. Well, that's increased volatility, but the stock's rising. And he believes interest rates will be zero for some time. Well, the shameful thing about that, of course, is that interest rates should be 3, 4, 5%. So the allocation of capital stops being dumb. Now, if the allocation, if interest rates are 3 or 4, 5%, you wouldn't invest in stupid stuff. You'd be able to keep your money in savings and get 4% return, and only you would invest when you're going to get a better chance of making 4 or 5% on interest rates. So interest rates have a place in a capitalist society. They have to be greater than zero to qualify sound investments. So when you have zero interest rates, you get stupid investments, just like the old NASDAQ boom. So obviously if you're going to have zero interest rates and you're going to have big crashes, it's going to scare the children. So I suggest that hard money, and whether it's digital or some sort of metal, is going to find favour over the next couple of years. So that's the Black Screen Flash TV. Watch out for it. There'll be no blog post. It's just going to straight to the YouTube channel. If you want to watch it from the website, just go to RTT TV and pick the black screen. Thanks for watching.